right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. It's time to get this analysis party started. Oh, we're having an analysis party. How fun is that? Well, that's about as geeky as it gets, doesn't it? All right. Okay. So here's the euro dollar. Let's take a step back for a moment and let's just understand what we're dealing with. Okay. So we've had this what I'm going to do is I'm actually going to delete probably everything here and then redraw. It's good to do, on a day when you're just kind of like, just kind of, especially it's a Monday. We're going into some pretty big, obviously a big week going into this week. So let's go drawing, remove all lines for current symbol. All right, so here's the euro dollar, and as you know, with the euro, and this is a longer term view, okay, a couple really important, in my opinion, pretty important developments with the euro dollar. So you got, what in my opinion still looks like a huge flag pattern, okay, huge flag pattern on a weekly basis. It's really hard to be bullish the euro dollar while you got this looking, staring it right in the face. I mean, you look at the daily, like you look at the daily RSI, for example, we're right back to neutral. The scary thing about that is when you go back to neutral after having such a big drop like this, it's really basically, it's kind of like, all right, I caught my breath. If I'm going to go down, I can do it at any moment now, and it's not going to be any big issue, right? So going over to the daily chart, let's go to the daily chart. Let's tighten up some of these lines here that I just drew out. So we have this. Let's connect all these lows here. Let's okay, and we're going to remove that, and actually I drew that too far out. Let's do it like this. Okay, let's copy that, paste it. Okay, you can see underside of that right there. See it? Basically that line is that line. You guys got me here? You guys see what I'm doing? All right. Okay, so we have this channel. Now, obviously we're sitting kind of trying to figure out what the hell we're going to do from here. And I think ahead of this FOMC meeting, it's a little dangerous to just start running out shorting the euro right now. But at the same time, it's like, do you really want to be on the long side? I don't know how comfortable I am being on the long side of the euro just yet. When we've surpassed the 786 retracement here, blew through it pretty good, and now we're just kind of consolidating. I mean, I think if we rally, and we rally back to the 113 level, that's going to give us a great opportunity to be on the short side. Now we can also take this low here to the high. Let's see, we're at the we surpassed the 618 as well. It's from a Fibonacci standpoint, doesn't give us a really good read. Okay. I personally, I don't really want to be on the long side, but I don't want to be on the short side here. So let's just make the assumption that this low that we posted this last week, or yeah, I guess it would be last week. Let's just assume it holds. Okay, so we're just going to go with that running assumption that it's holding. Okay, 24%, 38% takes us to 1322. Now, like I said, sometime this week, if given the opportunity to short the euro dollar on a rally back to 113, I'm in. I mean, I'll at least like I would like to short this zone, okay, from 113.25 to 114 basically, okay? Like if I can have an opportunity to sell through here, through this area, I'm going to do it. Right through here. If I can get short somewhere here this week, I'm all about that. Not sure if I'm going to get that opportunity, but that's what I'm hoping to do. Sometime, maybe towards the end of the week, maybe today, who knows. But for today, you can see that this 24% retracement is holding. Okay, that comes in at 112.30. That's also the spike high. Okay, so this resistance, you can see this previous support. I take it right through here. Previous support, resistance, resistance. That's capping us right now. And that comes in around, let's just call it 112.30. That is resistance for today. Is it great resistance? No. Is it resistance? Yes, it is. I really want to. I want to keep it at. I want to keep it at a bearish bias, but I don't know. It feels more range bound to me at the moment. Um, obviously we broke through like the 110 level. That's probably going to open up the downside, but I think you can, for today, you could probably trade through the 111 to 112.30 range. So if you're a buyer down here at 111, I don't think you're going to get hurt too bad. If you want to be a seller up here at 112.30, I don't think you're going to get hurt too bad. I think you can, trade the ends of the ranges. So I'm going to write down 111, okay, for now. All right, let's go look at the cable. So yeah, the cable, I mean, here's the thing that was really important about the cable though from last week, okay? And I'll just go back to this 4-hour chart. We hit horizontal resistance, 127% extension, 161% extension. We had, if you guys recall last week, okay, we had a real big hammer. You can see it on Friday, so you got to go like this, okay. All right, see it a little bit better. We had this hammer formation on Friday, okay. Big support, horizontal support, fib confluence. We gap down on Sunday and then we come ripping right back. All right. I mean that's a big rally. So you all know, and here I'm gonna get rid of this. You all know exactly why the cable bounced there. Now, the question is, how far are we going to bounce? Let's get rid of that. I know I tweeted that chart a couple of times on Friday. So we are coming right up to previous support. There's two areas in interest that interest me to sell the cable. For today, right here is going to be, obviously a place to sell the cable, especially if you can get a bounce above 154. So if you can sell it into some strength up there. But what I'd really like to do is sell it back at this yellow trend line somewhere up here, okay? So move up to here. Ultimately is where I'd like to be on the short side, okay? But today, 154, what's the spike low here? 154.25. We had a nice bearish trend last week, but we're now back in a range because of the rejection that we see the cable, rejecting from. the fib confluence, horizontal resistance that kept us really range bound because we didn't break down. So now, selling it into strength at 154 and a quarter, like for today, makes a lot of sense if you can get it. You just imagine it breaks above 154, takes out some stops above 154, let it take out a few stops and then short it into strength. Okay. Support now on dips. I mean, you have to imagine there's a lot of people now that are caught short the cable from last week. They're getting up here and North American trade going, oh man, I'm short the pound dollar. I can't believe I stayed short when we were down on support. Now they're going to, they're going to try to be buying on dips. I'm assuming that this 4 hour, this breakout area, this area is going to offer a lot of support on the way back down. That comes in at 152.90, right? So you imagine 153, you would break through it, just dips below 153, 152.90. That's going to offer some support today. Okay, you just have to imagine that we'll take out stops on both sides of the market. That's pretty typical for the cable. All right, let's take a look at the Swissy. Now the Swissy has been absolutely out of control strong, and let's note, okay, this downsloping trend line that we've had marked up. I mean, it comes in basically where we're at right now at 98. You can see it's right here. It 98 and change. All right, it's gonna find a ton of resistance as we get above 98 cents. We have resistance that comes in right at 98, and then just above it like 98.30, 98.40. I do not want to be on the short side of the Swissy. I want to be on the long side of the Swissy. This is the one currency pair that, in the event the Fed, like let's say they do the unthinkable and they raise rates. If they raise rates next week, this is where I want to be long more than any other currency out there. I want to be long the dollar against the Swiss franc more than any currency out there. Obviously the Swiss National Bank has negative interest rates, but if you throw on a rate rise by the FOMC, then you're going to have an extra strong move come out of the dollar Swiss. Dips should be supported to 96.80. This is all, same stuff we wrote down last week. Just removing some of these lines here. So currently, any dip to 96.80 is being pretty well supported. 98 cents is going to be resistance. So strong. Look at how we're just right up against our highs right now. So strong. And I'm gonna not put in bullish for right now, but man, we're at the upper end of our range. We really are. It's hard for me not to put bullish in right now, but it's probably not a bad short right here. But you know me, I don't like playing the Swiss franc long. In other words, shorting dollar Swiss. That's not my cup of tea. But for those of you that, if that's what you like to do, it's probably not a bad short here. Let's go to the dollar yen. So here's your dollar yen. I did add a little bit to my dollar yen short, just right here actually. 120.06 is my cost average right now. I'm only up 8.5 pips currently. Um, you can see where some of this momentum came from. Now I'm gonna this 50% retracement. You can see why we're there and why we stopped there. So just so you guys all know why 118.75 really held. Now here's the hourly. 50% retracement's holding here too, just like the 50% retracement held down here. The 50% retracement's holding here, so that comes in at 120.20. That should be good resistance for the day. 120.20. Now I still think the dollar yen is bearish. When we broke down through here a week or two ago, okay, 3 weeks ago actually, we broke down through here, it became instantly bearish. Now we've been doing is, backfilling a little bit, but the dollar yen, in my opinion, is a bearish currency. It doesn't matter if we rally all the way back to 121 and change, it's still bearish. Okay. Um, Support. Where's support going to be at today? Well, 1950 should offer us some decent support for today on any dip. Okay. All right, let's take a look at the dollar Canadian. So the dollar Canadian, last night, or yesterday rather, we were up above 133, and like I said, when I got up, I was curious to see if we are going to break out overnight. Crude oil has strengthened overnight, which has pulled down the dollar Canadian. You can see the dollar Canadian is pulling back as a result. Okay, we couldn't break out above the 130.20, which I'm going to remove this, and I'm going to highlight this 130.20 as being really significant resistance now. Okay, 130.25. This support will be critical as we come up to it. If you guys want to be on the long side of the dollar Canadian, in my opinion, you want to do it down here. Right there, if you can get it. So that comes in at 131.75. Yeah, that's a 7862. So 131.75. That is the place to be on the long side of the dollar Canadian. 131.75, and then resistance obviously is 133.25. And it's still a very bullish bias. Okay. You want to be on the long side down here if you can get it. Still trending higher in this channel. Okay. All right, let's take a look at the Kiwi. Now the Kiwi, we're trying here. I mean, we have resistance at 36.10. It's important. Resistance. Kiwi is still so bearish. It's having a hard time finding any type of support. It's trying to recover, obviously, right now. Let's get rid of this. But I mean, you look at a longer term basis, there's just, there's not a whole lot of support down where we're at. So any bounce that we're getting seems very limited, and we will have to get above 64 cents really to turn the ship. All right. But for today, I mean, any move up to 63.10, like allow stops to get taken above 63. Then try to get on the short side above 63.10 if you can. Get short up here if you can. Let stops above 63 cents get taken, then short into that strength. Okay, and support 62.40. It's bearish. It's having a difficult time. Difficult time. All right, let's take a look at the Aussie dollar. Now, because of the improvement in the trade balance numbers in China, the Aussie dollar managed to, pull its head off the ground a little bit. But, oh man, matter of fact, are we trying to turn the corner here? Oh, so close. Okay, first of all, let's go out to the weekly chart. Now, as I blogged about this late on Friday, if you guys didn't see it, here, let me. Okay, we closed the week and the month below this rising trend line. So any move now back up to 71, 72 cents is going to be a short. I mean, people like myself, knowing that we close below a monthly and weekly trend line like that, I'm looking to sell in a strength. Now, the good news is that we might get some strength here, especially if the Aussie dollar can squeeze past where we're currently at. We get a good squeeze past 70 cents. We might actually, squeeze all the way back up to 71.67, 71.70, or 70.70. So above 70 cents, and it gets squeeze-alicious. It's still bearish, okay? But if we can break above this 70 cents, that might cause a bit of a squeeze. Still bearish. Like I said, it can make it all the way up to 72 cents and still be bearish. All right? But we might get a squeeze here. We might get a squeeze up to 70 and a quarter. Now support obviously is down here at 69 cents. Actually, I believe support's probably going to be before that, but $69.50 will probably give us some support. Okay, but still very bearish. All right, when I come back, we're going to do the dollar index. We're going to do the Nordic currencies, the peso. I'm going to go grab some more coffee. I'll be back in a few moments. Don't go anywhere. Thanks, everybody, for being here. Well, who would have thought that the pound would squeeze above 154 on the way to 154.20? Oh, who would have thought that? Okay, guys, watch out. We're heading up towards resistance. I'm already starting to inch my way in for some shorts, just letting you all know. I sold some at 154.06, and I'm going to sell some more as we get up towards 20. So just wanted to let you all know that. Let's take a look at the dollar index. Okay, so here's the dollar index, and the dollar index is busy just kind of consolidating. I think you guys probably remember this, that from from last week. Let's go ahead and get rid of this really fast. Okay. You can see that the dollar index is really just kind of holding steady, and resistance right now, it really is up at 97 cents. But for today and tomorrow, or for right now, actually, we're probably looking at 96.60 and 95.80. Okay, as being support. We went as low here as 95.72 today. So I guess we can write 95.70 as support. And then resistance at 96.60. Okay. Still very much in a range environment. Let's go take a look at the peso. Peso. There it is. Here's the peso. So the peso is really, I mean, I guess we're still finding resistance where we thought we would find resistance, right at the 50% retracement here. Still struggling, same place. Support's going to be down here. I mean, the peso doesn't look like there's a whole lot to do at the moment. Yeah, I don't know how terribly excited I'd be about trading the peso right now, especially while you're mid-range. I mean, if you can get a dip, crack through this support, maybe get a dip down to 1665 again, that would be a great place to be on the long side, if you ask me. Let's take a look at the Norwegian krona. Real tight trading range. Really tight trading range still.